Our second full week of the year. First week on the 2nd of January was not a full week. We had the first off, as you all know. Morning all. It's actually, it is a good morning. I don't mind cold, even very cold. Sunny is good. Cloudy and wet, not much good. So we got quite a bit of that this week. -5, my BBC weather app's telling me. Anyway, it was 11 degrees when I got to my home office out in my garden. Anyway, I'm sitting in my coat. I think perhaps my coat is not needed anymore. Anyway, markets, yeah, they did better last week. The key US indices, the S&P 500, which is what we're looking at here, and the morning to you, Owen, morning to you, Shaya, and the Nasdaq. Look at that! Wow, stock index that just had monster gains last year. Just low, higher high, higher low, higher high, higher low. That's called an uptrend. Yeah. Whether it will uptrend throughout the year is another matter, but it's certainly investors, traders are all in the mind to buy it on dips. And at the end of the first sort of few trading days of the year, we're all a bit, I wonder if it's looking a bit toppy. The number of people I know in this industry, professionals, money managers, fund managers, etc., who just say they're very wary of the US markets, but they've been like that for half a year. It is an extraordinary outcome, as I keep on saying last year. Anyway, there were some notable moves, not least in the key US indices that the US most, well, in fact, all of us track. We track the Nasdaq and we track the S&P. The S&P 500 is the top 500 shares in the US by market capitalization, i.e. by what they're worth. And you might think, well, what other index, which is another way of tracking an index or building an index. Well, the Dow Jones, believe it or not, is something called price weighted. So the higher the price, the greater the weighting it has on the index. So you can have smaller stocks like Alcoa that can have a dramatic effect on the index. And you only need to look at the Dow Jones to see exactly that play out. Doesn't really look like the S&P or the Nasdaq, does it? No, it doesn't. Anyway, despite let's put up Forex calendar. Yeah, so just have a quick look at what happened last week. We had well, actually, it wasn't data that was the interest. It was more what a Fed official said, and that Fed official actually came out on Friday and said that interest rates would likely stay higher for longer than the markets were anticipating. This is this chap, Raphael Bostic, who is the president of the Atlanta Fed. So there are a number of key federal districts with important people who are then also members of the Federal Open Market Committee that decide where interest rates are going. And those people on the FOMC, that committee meets, well, I think we know how often it meets. It's called monthly meetings, but in fact, it turns out to be 8 times a year. An 8-month year for the Federal Reserve. Anyway, you can see that the first meeting is on the 31st of January. He's basically saying that he's expected to see much slower progression of inflation moving forward, and said that he expected rates would need to remain on hold until the September meeting. So that's out here. I find that weird. I find it weird because in September, the markets are expecting rates will have been cut by anything up to a full percentage point. So 4 quarter-point cuts. It just shows you the gap between the interest rate expectations between what I would describe as the hawkish Fed or the hawkish FOMC and the very optimistic markets. Maybe it's going to be somewhere in the middle. Yeah, possibly. Anyway, current projections, as you can see here, have the rate falling to 4 to 4.25% by September, and with interest rates are currently at 5.25% to 5.5%. So Yeah, in fact, that's 5 quarter point cuts, literally a cut virtually at every meeting. So there'll be 1, 2, 3, 4, yeah, every meeting from March onwards. Extraordinary. Anyway, the Fed's preferred measure of inflation, and we talk about this weird preferred measure. In the UK and in the US, they have the regular CPI data, like we've got this week, Consumer Price Index, and that's what they release in the United States. Their statistical body out there releases this Consumer Price Index. But the Federal Reserve follows something called the PCE report, Personal Consumption Expenditure. Bit of a clumsy old name, but this report is impacted less by accommodation costs, or what Americans call shelter costs. And it's released a few days before the FOMC meet in at the end of January, on the 31st of January. And that's the first meeting of the year. And while we're expecting no change, it'll help the Fed inform the committee about the challenge of lowering inflation to the 2% target. So whilst we're not expecting anything to happen at the end of the month re US rates, it will be really interesting to see and hear what they've got to say about it, because there is this gulf in expectation between what the markets are expecting rates to do and what the Federal Reserve are thinking they'll do. Anyway, there we go. Yeah, so in where am I at? Investors, yeah. So looking at investors, traders, the likes of you and me, or at least commentators on the markets, we're all expecting a slowdown in economic activity in the first half of this year. So nothing like the pace, for example, in the third quarter last year in the US. But what's now creating quite a lot of uncertainty are these attacks on the ships, or ships that were passing through the Red Sea route, that are now taking this much longer route, and much costlier route, I might add, around the Cape of Good Hope. The reason why this is mentioned is because it's a relatively sort of simple approach that the Houthis in Yemen are taking. These are the Iran-backed Houthi militia that are so doing it in support of the Hamas in Gaza, but actually they're targeting any and every ship. So it's all a bit, how can I put it? It's that it's part of the idea that Iran is trying to foster some sort of conflict in the Middle East using proxies in Gaza, that's Hamas, Hezbollah in southern Lebanon, and the Houthi rebels in Yemen, who really control Yemen, to be honest. And when you look at the coastline, the strait through which ships have to pass is so narrow. They are, as one commentator called it, sitting ducks if the Houthis do want to fire missiles. But of course, they're now the freight on the ships are now being protected by combined forces, including the US and UK ships. But they're pretty resilient and well funded. The Houthis. Anyway, it was a bit of a result last week when you see what actually happened with equities when we look at the S&P 500, because it was looking a bit dire at the beginning of the year. We had that sell-off, and obviously all the sort of stuff that was happening in the Middle East with the spread of the conflict, which some commentators are saying, well, it hasn't actually spread. This whole thing with the Houthis in Yemen is a different issue. But actually, that's not really the way it's been seen by the Arabs and the Arab world, that really acknowledges that this conflict is spreading. Although the US really, and I guess the US allies, including the UK, have made it very clear that the attacks on the Houthis have nothing to do with the Israeli-Hamas conflict in Gaza. Big election year, says Owen. Yeah, it is. This is called the year of democracy, Owen. Not just UK, US, Taiwan. Gosh, there are just lists of them. There's some in Germany. Something like 54% of the democratic world, free world, is voting this year. Extraordinary. Yeah. Big election year. Yeah, we'll get on to that in a second because there is something called the caucuses starting today in the US, which is how the Republican Party elect their candidate for the presidential election at the end of this year. Um, anyway, yes. Going back to the performance of these major indices, I did mention it last week that the first few trading days of the new year can influence, or I suppose really determine, how the year will pan out. I know it sounds a bit weird, but how the first or second week of January goes is a big marker. How January turns out, i.e., what the performance in the whole of January is, can often influence how the year will pan out. And I think last week was the first full week's trading, and many bulls, I think, will be comforted by the turnaround. And you could just read it in the press, you can read it in the reports. There's a lot more happiness abounding because this is going to be a tough year. Make no mistake. Last year, some people struggle to understand why the stock market's rallied. But remember, equities and equity investors, they're looking they're looking way ahead, sometimes 15, sometimes 18 months ahead. And all of that last year was to do with what the Federal Reserve are likely to do with interest rates this year. Now, what happens post interest rate cuts? When those cuts happen, will they happen according to what the markets are expecting, or will the Fed get it right? Will the Fed demonstrate to the markets that actually inflation is going to be stickier? And maybe it will be. Maybe the cost implications of these freight ships and tankers having to go around the Cape of Good Hope is going to create more inflationary pressures. At the moment, shipping costs have gone up by about, I think, something like that. It's called, I think, Shenzhen to Rotterdam. The rate has gone up to about $3,000 a container, which is a significant jump, but it's nothing like the jump that happened when the West or the world unlocked after the pandemic. Freight rates, the container rates went up to 10, 12, on occasion up to $20,000 each. So, but it's still a problem, and that's something we're going to follow quite closely. Oh, and we have Davos kicking off this week. Yeah, Davos, run by the World Economic Forum, Davos in Switzerland. It's a bit of a closed sort of talking shop, but I'll get onto that in a second. It happens all week. Yeah, all week. I know people are out there actually. Anyway, another point, someone's actually said, what about Japan? JP. Oh yeah. Good point. Yeah. Well reminded, whoever asked me that question, John. Yeah, a big move. What does it move? It moves. So that's the fifth there. Wow. Yeah, huge move. Yeah, and a huge move again today. Yeah, what is that? That's more than 6%. 6% last week. So it looks like it's actually broken its highs from 2021 when Warren Buffett announced that he'd invested. Oh no, we've gone way through it. Yeah, look at that. Yeah. So we must be back to sort of levels not seen for 3 decades now. Just extraordinary, and there are a lot of big fans of the Japanese stock market, Warren Buffett being one of them. I think there were concerns that the Bank of Japan was going to abandon its ultra loose monetary policy. If you know what's been happening in Japan, they have been ignoring inflationary pressures and have kept interest rates at very low levels, referred to as an ultra loose monetary policy. And it's continued to pursue it despite inflation picking up in Japan, which is now moderated. But the Nikkei rallied, I think, about 25, 28% last year. And I think a lot of analysts fear that if the Japanese rates went up, then the Nikkei would fall. The reason why the Nikkei would fall is because if rates went up, the Japanese yen would rally. And that's something you can see here. Dollar yen, not rallying, is it? It was above 150 back in November, October time. Anyway, but if the yen does rally, fall, if it falls, it's good for stocks. If it rallies, which it had done, it's bad for stocks. But this recent fall in the Japanese yen, let's get it right, the recent fall in the Japanese yen has really helped Japanese equities. And the reason why the yen is falling is because most analysts now believe that the Bank of Japan will not be ending its ultra loose policy, partly because of what happened on New Year's Day with that earthquake. And that's had a big effect on investors' expectations. Not sure really, but I actually think it's probably more a case of a delay in the Bank of Japan's rate plans rather than a volte-face. So yeah, but interesting to see the Japanese market being the standout, very much the standout market so far. Let's get on to currencies very quickly. The euro, bit of a flat sort of week last week for the dollar. The euro ending a little bit higher. Yeah, just a few pips, in fact, hardly anything. 8 or 10 pips, but you can see on the chart it completely flatlined. Sterling a little bit higher, the yen a little bit higher as well, but not much to write home about. And they investors or traders, people who are in foreign exchange are traders, not really investors. They absorbed the worse than expected inflation data last week, if you remember, and the hawkish comments from the Atlanta Fed chap, what was his name, Raphael Bostic, about interest rates staying higher for longer. If interest rates stay high, it's better for the dollar. Anyway, yeah. And seasonal trends. Yeah, at this time of year, you tend to have the dollar quite well bid. There is a natural demand for US dollars at the start of the year, in January particularly. And you can actually just Google seasonal trends for foreign exchange, and you can find out that the US dollar in January has gained 60% of the time over the last 20 years. So for the last 20 years, 60% of Januaries have resulted in a stronger dollar from the start to the finish. Yeah. What else is going on? Oil, not surprisingly, with what's going on in the Red Sea. I did see they got like a satellite tracking devices of all the container ships and tankers that normally go through that strait up the Red Sea and then through the Suez Canal. There's hardly any now. Something like 90-odd%, 93% have been rerouted around the Cape of Good Hope, around the bottom of Africa, and it adds on between 9 and 20 days to a trip, significantly increasing the freight costs, which we've already discussed. But it still could go a lot more, obviously, and it could really affect the price of oil if this continues. And that's really what this coalition is about, is ensuring that they just snub out this threat. But at the moment, all of the major shipping lines have not changed their view, that's for sure. Okay, calendar very quickly. Let's get on to it. Start of the week. Well, we know it's Martin Luther King Day. Yeah, U.S. exchange is closed with expectation of lower liquidity here in the European markets, but it's a federal holiday, so all the markets are shut. We have, as Owen was saying, we've got the World Economic Forum meeting in Davos in Switzerland. A rather nice place to meet, but it's quite a serious event. There are closed sessions, but the media swarm over the resort. You've got politicians, financial heavyweights, so that's central bankers and big private equity hedge fund dudes, all there to tackle the global macro challenges shaping our world, which really, as usual, the stuff happening in the Middle East is really will be a major talking point, which has the potential to really impact global trade and indeed inflation at a time when inflation has been coming down. So a fascinating week, but this, so you can see it here, the World Economic Forum, WEF, that's what that stands for. It's all week, and everyone's talking. I won't go into all the people that are talking, but Christine Lagarde and other heads of state. I think Antony Blinken's there from the US. So there are you know, the grace, the good. Yeah, they're all there. Okay, so apart from Davos all week and apart from the Martin Luther King holiday today, there's nothing much else to report on Monday. Tuesday, we kick off with some more important data for the UK, the employment report, or what's referred to as the claimant count, the number of people unemployed, and also average hourly earnings. The monthly claimant count sort of remains quite moderate still, as you can see. 18,000, whilst earnings are still, well, actually earnings are higher or remain above inflation, which is good for workers. That means they're not losing any purchasing power, but average earnings are declining, as you can see. Okay, so data coming out. We've had to talk about the claimant count. We're going on to Empire State Manufacturing. Yes, so sterling will be sensitive to the employment data. Then we get on to welcome, thank you. Empire State Manufacturing. The Empire State is New York State, and you might think New York doesn't have manufacturing. It's a huge state, and it's got a ton of manufacturing. So actually, we like to know what's happening in the Empire State as regards to manufacturing. It's the first of two reports this week. We've then got the Philly Fed later on, and you can see there's an improvement happening not just in the Empire State but also the Philly Fed, which we'll see later on, but minus 4.9, still not brilliant, but a little bit better. We then got our friend here from the Bank of England, Andrew Bailey. He's testifying on the UK economy. They've got to do it before the Select Committee in the Houses of Parliament. This is actually the Lords Economic Affairs Committee in the Houses of Lords. Sterling UK assets will be sensitive to that as well. It's quite an important topic, the how the UK economy is performing. Any hints about interest rates will have a big effect on sterling, as you know. On Wednesday morning, early doors, before most of us are up, before I'm up anyway, although I do sometimes wake up in the middle of the night, but I'm out of bed by 10 to 6 most mornings. Industrial production, retail sales, fourth quarter GDP. So we're seeing an improvement across the board, really, in China. A few cynics will say the official data is just that. The official data is published to match the forecasts rather than how can I put it, an independent report. And we do get the Cakesin one, which is a lot more reliable. But anyway, there is a view that the Japanese economy has started, sorry, the Chinese economy has started to pick up, but it's still facing quite a few headwinds, especially deflation, which it can't shake off for the time being. And then we hit the big one for us here in the UK inflation data. So GBB, CPI data, the year-on-year rate, and this is the headline rate, 3.8%, last at 3.9%. That's important, but services inflation is the problem for our what we call our core inflation, and this is the one that excludes those volatile components that pushed inflation up in the first place. So core inflation excludes, I know it's not shown here, I'm sorry, but that's Forex Factory. Core inflation excludes those elements that pushed inflation up in the first place, namely energy costs and food. Anyway, core inflation is expected to remain above 5%, whereas you can see here the headline inflation rate, 3.8%. Anyway, it is a moderate improvement, but it depends what the core inflation rate is doing. But I suspect a stronger than expected core inflation reading will probably result in a few comments about a delay in rate cuts here in the UK until probably mid-year, sort of June, July time. So obviously sterling, UK assets, so the likes of UK shares, UK gilts, that's the sovereign bonds, they'll be very sensitive to this release. So early doors, Wednesday morning, 7 o'clock, that's when the data is released. Then in the afternoon, in the US, we've got retail sales, the core retail sales that excludes some of the big ticket items and transportation. no surprises really expected. It used to be a really interesting report, retail sales, but it's sort of become less so. But the US consumer has cooled a little bit since the third quarter last year, but retail sales are holding up in the US for now. Thursday, we jumped to, what do we do? Well, I'm going to ignore anything that is to do with the World Economic Forum because there's so much stuff that's happening there that's too much to go through. We have, there we go, the Philly Fed Manufacturing Index, that's what I want. So the Philadelphia region, another heavy manufacturing base. That's where we like also to hear how well the manufacturing sector is doing. Unlike the New York report, the Empire State report, an improvement from the previous month, minus 6.9, but you click on the graph here and you can see it ain't been doing particularly well. It's got to be above zero for it to be in positive territory or expanding rather than contracting. It's only had 1 month this year, but it is a little bit of an improving trend from middle of last year. So whilst it's still low, below zero, it is improving, showing signs of improvement. An A for effort, but probably a C for achievement. And then we move on to Friday to UK retail sales. Strong performance in November, wasn't it? Black Friday sales, I guess, but looks like it's going to be followed up by a fairly poor showing in December with non-food sales slower. So sterling will be sensitive to that release at 7 o'clock on Friday. And then prelim University of Michigan consumer sentiment. This always used to be medium impact. I think it's a very, very strong high impact number. And it's something that economists look at because it's a great leading indicator that tells us what will happen. We're not interested in getting data. GDP data, for example, tells us what has happened. It tells us how an economy had performed in the fourth quarter, in the third quarter. We want to know how it's going to perform in the first quarter this year or second quarter. That's why interest rates are really interesting, because the performance of our economy depends on the level of interest rates. The performance of the US economy depends on the level of interest rates. That's why there is this big focus on what the central banks are going to do with interest rates. Please, if anyone knows, if you can get an inside track on what they're thinking, well, yeah. Anyone know anyone who's a member of a policy committee? I don't. I know of them. I don't know any of them personally. I suspect they have to be sworn to secrecy. Anyway, the University of Michigan consumer sentiment 69.3, holding in there really. Consumer inflation expectations are also released, which is interesting to see, because if consumers are expecting inflation to go higher, then they tend to sort of hold back on expenditure, which can affect obviously retail sales, and overall consumer sentiment as well. Anyway, there we go. 3 o'clock. One of the more important releases of the week, I'd say. During the week, you will get a smattering of reports from the World Economic Forum. I won't go into all of those. The World and his wife are speaking, but keep in touch with the news. BBC News is actually a good free one. Yeah, keeps you in touch. Listen, that's it. Thank you very much for listening. Listen, have a good rest of the week. Keep warm. Vests, I've been told. Layers, wear layers, and we'll catch. Actually, no, we won't. I'm away for the next 2 weeks after this, so I will catch you on my return on the 5th of February. All the best, everyone. Have a great one. Bye.